All right, on to Wall Street. We're watching as stocks wrap up a week of gains. Some big names in tech, they saw a boost. The Dow eked out a 0.05% gain as investors digest mixed messages on trade talks between the U.S. and China. So let's take a look at our interactive stock market heat map. This is brought to you by FinViz, showing the top 500 stocks. A good number of those big boxes in the green, but we're still seeing some red. So CBS News MoneyWatch correspondent Kelly O'Grady joining us live from the New York Stock Exchange today to break it all down. What happened in the markets today? What can you tell us?
Yeah, we just had the closing bell a couple of minutes ago here. A lot of excitement because we finally had a good week on Wall Street. You know, today specifically, we saw a lot of ups and downs. The NASDAQ particularly did well most of the day. As you said, a lot of those big tech names, especially Alphabet, really getting a boost from that good earnings report yesterday. But there are two things I want to call out. I mean, obviously, we are still having this uncertainty, back and forth, mixed messaging when it comes to these tariffs, particularly the negotiations or non-negotiations with China. I spoke to a number of folks today to take their temperature, and they said, look, there is some optimism that there may be some movement when it comes to deals with these countries, but they're still skeptical of the fact that there is so much mixed messaging, especially when, in that Time article, President Trump said that a year from now, tariffs on rather 20 to 50% on countries would be a win. That's not something that folks here wanted to hear. The other thing that I'll highlight that you would have expected to move the markets but didn't was a consumer sentiment reading. And the reason it didn't was it was bad but better than expected. And Jules, right now, that is kind of a cause for a sigh of relief with the environment that we are in. We saw consumer sentiment drop 8% from March. People are not feeling good about the economy, but as I said, it was better than expected.
Yeah, okay, so let's talk about Apple. In the wake of Trump's tariffs, Apple reportedly plans to move assembly of all U.S. iPhones to India, but we know Trump wants to bring manufacturing to the United States. So what is the strategy for Apple here?
Find a country where they can manufacture all of those iPhones cheaply that is not going to be as high of a tariff as China, right? Right now, there is a 145% tariff on China, and if that were to stay in place for the foreseeable future, remember, a deal with China didn't come for at least a year during the first Trump administration, that trade war. And so what they are looking at is it would be really tough to spin up manufacturing here in the short term, and it would be a lot more expensive to make iPhones here. Remember, they sell about 60 million right now in the U.S., and 80% of those are coming from China. So moving to a place like India, where there's a 10% tariff right now, potentially a trade deal in the offing, that is financially a better deal than staying in China or coming here in the near term, Jules.
All right, Kelly O'Grady. Kelly, thank you.